Okay, for intercompany balances, let's take a look at the theory behind intercompany balances. So if you take a look at here, it explains that normally, if you have a group of companies, what happens is that normally they will have members that conduct businesses between one member of a group with another member of a group. Okay, so if you have, let's say, this is a group. For example, we have a set of group of H, okay, and then S1, S2, okay. Sometimes S2 and S1 do businesses. Say S1 sells goods to S2, or S2 sells goods to holding company, and holding company sells goods to S1, for example. Okay, so they sell goods one to another. Okay, that is intercompany transaction. As we know, in intercompany transactions, in consolidated financial statement, has to be eliminated because the transaction that should be recorded is the transaction of the group as a whole. Okay, the group as a whole with the transaction of a third party. Let's say A. Let's say A is a third party. So any transaction between the group and A is recorded, but any transaction between the members of the group, between S1 and S2 or S2 with H, that should not be recorded. It should be cancelled. Understand? Only transaction between the group. This is the group. Okay, the group, and this is A. A is a third party outside the group. Okay, only transaction between group and outside parties will be recorded in consolidated financial statement. Transaction within the group will not be recorded. Okay, so normally that's the case lah. Okay, members within the group may conduct business between them, or may borrow and lend money. Okay, not only conduct business, but sometimes holding company lend money to the subsidiary. Okay, or the subsidiary lend money to subsidiary 2, or subsidiary lend money to holding company. Okay, and this is known as intra-group trading and intra-group transaction. Other transaction may give rise to members of the group owing each other sum of money. Maknanya sometimes this transaction will result in one member of the group owe monies to another member of the group. For example, debtors of A, debtors of subsidiary 1 include debtors, creditors of subsidiary B, or subsidiary number 2. Okay, because you are buying and selling between members of the group. So you record subsidiary number 1 as debtors, and subsidiary number 2, you record subsidiary number 1 as creditor. Okay, so these balances may be represented in the form of loan. Okay, loan. It could be in the form of loan. Okay, loans to and loans from. Okay, sometimes holding companies lend money to subsidiary. So inside the holding company have loan to subsidiary, and inside the subsidiary have loan from the holding company. Okay, and sometimes you have receivables and payables. Okay, receivable of H include amount owed by subsidiary number 1, contohnya. Okay, so in the subsidiary number 1 there is a creditors. Inside subsidiary number 1, creditors which include holding company. So between debtors and creditors of one member of the group, receivables and payables. And then you have current account, because there's so much transaction that constantly being made between members. Sometimes they open up a current account of subsidiary 1, current account of subsidiary 2, current account of H. Okay, so these are balances or intercompany balances, and it has to be eliminated, cancelled upon consolidation. And sometimes you have bills payables and bills receivable. Okay, sometimes amount of certain transaction has been billed to subsidiary number 1, and sometimes bill ni kita boleh discount dia. ke third party. Maknanya kita jual bil ni, katalah saya ada bil ni, subsidiary number 1 berhutang dengan saya 100 ringgit. Saya bagi yang ni, you pergi kutip 100 ringgit daripada, jadi you bagi duit kat saya, contohnya. Itu macam bill has been discounted kadang-kadang. So bills payables, bill receivable is also intercompany transaction and has to be eliminated. Sometimes you have interest payable, interest receivable. If the holding company lend money to subsidiary, there's some sort of interest that they have imposed on. And sometimes dividend payable and dividend receivable, where subsidiary or holding company acquires subsidiaries, let's say PSC, you have declared dividend, subsidiary declared dividend, so maknanya subsidiary has to pay dividend to some of the dividend to the holding company, dividend payable to holding company, dividend receivable from subsidiary, contohnya. So as the objective of the consolidated statement of financial position is to disclose the total net asset employed by the group as a single entity, okay, as a single entity, the consolidated statement of financial position should not disclose any intra-group or intercompany balances. So that means it has to be eliminated or cancelled. The consolidated financial statements are to report transactions that have taken place with parties outside the group. Maknanya contohnya macam inilah. A is outside the group. Transaction between the group and A is transaction that will be accounted for as transaction of the group. But the transaction within the group between S1, S2 and H will not be recorded. It will be eliminated and cancelled. Okay? This also avoids a double counting of assets and liabilities that arise through transaction between members of the group. That's why we have to eliminate or cancel it, because we need to avoid double counting of assets and liabilities. Kalaulah kita tak buat itu, maknanya kalau H lend money to S1, contohnya S1 dalam account dia kata ada loan from H 100,000, dalam H ada loan to S, asset 100,000. Kalau kita gabungkan asset itu dengan liability itu, maknanya asset itu akan di overstated, liability itu akan overstated, sebab transaction between the members is not a transaction of the group. Okay, the transaction of the group is between the group and third parties. Okay, therefore all intra-group balances have to be eliminated. However, where one member has made a remittance but the other has not received it yet, the remittance is treated as asset in transit. This is asset in transit, such as cash in transit, goods in transit, where you have holding sell goods to H, holding sell goods to S1, contohnya dia hantar on 31st December, 1st January baru sampai, maknanya that goods is still in transit, you tak record lagi. Sometimes hutang antara H dengan S dah hantar duit tu hari ni 31st December, tapi yang masuk account 1st January. That is cash in transit, and cash in transit will be recorded and cancel off will be recorded in the consolidated financial statement. So item in transit here, item in transit are cash remittance and dispatch or other assets, sometimes asset lah, sometimes goods, sometimes cash, such as inventories by one party, but the other party has not yet received them as at the statement of financial position date. The item in transit are adjusted for in the accounts of the holding company. The adjusted balance derived at can be cancelled off against the amount shown in the relevant accounts of the subsidiary. If the amount owing to and due from between one subsidiary and another subsidiary, the adjustment is made in accounts of the company to which the items are in transit, i.e., that is, in the accounts of the company which has not recorded the transaction. Okay, maknanya kita kena bring the transaction, the amount to equal amount so that you can cancel it off again on consolidation. In this order, this is in order to bring the intercompany balances to be of the same amount. However, these balances are eliminated in the consolidated account. Later on, we will look at cash in transit, item is in transit. And factoring of receivable. Receivables, sometimes you have receivables and payables. And between one subsidiary with another subsidiary, or one subsidiary with a holding company, where you sell goods from one another. So you have debtors and creditors, receivables and payable. And sometimes these receivable and payables, receivable can be factored. Factored means you jual. Receivable ni you jual. You jual untuk dapatkan duit. Maknanya katalah receivables yang you jual, katalah subsidiary ni hutang holding company 100,000 dalam bentuk receivables. The holding company kalau dia nak duit, dia boleh ambil receivables ni, dia bagi receivables ni kepada factoring company. Factoring company dia akan beli receivable ni dengan harga mungkin 98,000 contohnya. Jadi dia akan kutip nanti dengan subsidiary 100,000. Jadi holding company dapat jual receivable tadi pada harga 98,000, dia dapat cash 98,000. Factoring company nanti dia akan kutip daripada subsidiary 100,000 contohnya. Itu maksud factoring. At times receivable due from members within the group may be factored. The amount outstanding to the party outside the group is a liability. So what happened is you have receivable which is factored, is that which has been discounted. You have to what has been discounted is considered as to be liabilities of the group. For example, you have contohnya katalah you have holding company and subsidiary. This is the group. Okay, this is the group. Factoring company, okay, let's say that you have bill receivable. Antara ni kita ada bills receivable. Okay, bill receivable 100,000. So dalam S ni dia akan ada bills payable lah. Okay, katalah holding company jual stock ataupun goods to S kan, 100,000. Jadi holding company keluar bill ataupun receivable lah, receivable 100,000. Bila holding company nak duit, dia akan discount ni kepada factoring company. Let's say that dia discount katalah 50,000 discount. Contoh factoring Jadi tinggal lagi katalah sini bukan 50,000, 60,000 discount. Dia dah jual ni 60,000. So what happens is that yang tinggal 40,000 yang belum lagi undiscount. Undiscount. Okay. Jadi 40,000 yang undiscount ni represent amount yang intercompany balance, undiscounted amount. yang dah di discount ni is considered as liability of the group. Faham tak? Liability of the group yang dah discount. Yang tak discount ni yang kena cancel. Need to cancel. Okay? Yang tak discount, the undiscounted amount has to be cancelled. Yang dah discount tak perlu cancel sebab it represent liabilities of the group. Understand? Okay, itu maksud dia. So what is explained here is that at times the receivables due from members within the group may be factored. The amount outstanding to the party outside the group is a liability. The unfactored amount is cancelled. Okay, kalau kat sini undiscounted amount is 40,000. Yang telah di discount 60,000 tak perlu cancel sebab dia adalah liabilities of the group. The undiscounted amount tu yang perlu kita cancel. Okay. Illustration. The following intra-group balances appear in a statement of financial position of the parent company. Here we have the parent company lend. This is borrowing, money. Borrowing of money between the parent company and the subsidiary. The parent company lend money 100,000 to the subsidiary. However, the subsidiary has remitted 20,000. So 20,000 is cash in transit. Okay, this 20,000 is known as cash in transit. Okay, at the end of the year, which the parent company only received at the beginning of next year. Maknanya it is in transit. Okay, so these are intercompany balance 100,000 ni. And then these are cash in transit. What do you do? First of all, you know that intercompany balance has to be cancelled. Okay, maknanya any amount loan to as loan from H must be cancelled, and cash in transit must be recorded as cash in transit. Okay, in the group. And then part B here, this is bills payable and bills receivable. Bills payable of a subsidiary of 25,000 is due. It says that is due to the parent. The parent has factored 10,000. Maknanya out of 25,000 ni, okay, out of 25,000, 10,000 has been factored. The unfactored amount is 15,000. Jadi yang dah factored tak perlu cancel. Yang unfactored tu yang kena cancel. Okay. So you have to find out of this 25,000 minus 10,000, that is 15,000 unfactored. Need to be cancelled. Okay. C, trade receivables. Maknanya it is between trade receivables and trade payables. Trade receivables of 17,000 of the parent are receivable from the subsidiary. They include 8,000 for inventory sent by the parent on 30th December, which was not received by the subsidiary till 11th of January. So maknanya kat sini kita ada holding company jual goods kepada subsidiary. Dia dah hantar the trade receivable 17,000 ni of the parent receivable ni, they include 8,000, which is 8,000 ni is goods in transit. Goods in transit. Okay, goods in transit. This is known as goods in transit. Tadi cash in transit. Ni goods in transit. Okay. So what you need to do is that you have to bring down this amount. 17,000 to kita akan record lah goods in transit ni, debit goods in transit, credit receivables, credit receivables. Now accounting treatment yang nombor A tadi part A tadi kan, kita ada cash in transit. Loan from parent, it says that loan from parent and loan to subsidiary will be cancelled, and the debit balance appearing in the loan of subsidiary will be treated as cash in transit. That is how it should be treated. And part B ni kita ada bills payable and bill receivable, where the undiscounted amount ni must be cancelled. Bills receivable of 15,000 will be cancelled against the bills payable, and the 10,000 discounted is a liability to a party outside the group. Okay? Mana 15,000 ni will be cancelled. Cancel macam mana? Debit bills receivable of H, credit bills payable of S. Kita akan cancel macam tu. Trade receivables. Trade receivable we have kat sini kan kita ada trade receivables of 17 kan. Out of this 17, goods in transit is 8. So 9,000 will be cancelled. 8,000 is goods in transit. Cancel 9,000, mana bills, trade receivable, credit, debit, trade payable of S, 9,000. And then debit goods in transit, 8,000, credit, trade payable of S, 8,000. That's how what is being done here lah. Corresponding reduce the amount of trade receivable. So mana kat sini? Okay, debit trade payables, debit inventory, credit receivables. Okay, contohnya loan tadi, loan from parent 80,000, cash in transit 20,000. Lepas tu kita cancel off loan to subsidiary. Okay, loan. Okay. Jadi kita akan ada cash in transit lah nanti dalam kita punya consolidated financial position. Bills payable yang kita tak discount lagi itu kita kena cancel. Bills payable 15,000, credit bills receivable 15,000. Kita buat macam tu. And then current accounts, as I mentioned earlier, sometimes in situation where there are numerous intercompany transactions, it is more convenient to operate current account to record the amount due to and from each other. The current account is debited for amount due and credited for amount owing between holding and subsidiary, or subsidiary with another subsidiary. Okay, but this current account need to be cancelled. So if you have current account, it needs to be cancelled. Bills receivables and bills payable, I explained tadi undiscounted amount apa semua kan. Bills receivable and bills payable are negotiable financial instruments that the holder can transfer to another party. For example, if the subsidiary owed the parent 40,000, the parent may have the bill drawn where it states that the subsidiary owes the parent 40,000. This legal document can be used by the parent to pay another party. Okay? At times, these bills are discounted with discount houses or financial institution. Macam factoring tadi lah. Okay? Kita jual kita punya bill tadi. Bills receivable ni kita jual kepada orang. Kata kita ada holding ada bills receivable 100,000 yang dihutang oleh subsidiary. Kalau holding nak duit, holding boleh pergi jual bills tadi kepada factoring ataupun discount housing. Macam bank lah, financial institution, macam bank. Dia pergi jual bill tu, katalah bill tu harga dia 40,000. Dia boleh jual pada harga 38,000. Dia dapat duit 38,000. Discount housing, dia akan kutip bil tu daripada subsidiary 40,000. Maknanya dekat situ dia buat untung 2,000 lah. Faham tak? So at time these bills are discounted with discount houses or financial institution. Once the bills are transferred, then the subsidiary does not owe the parent on the bills discounted, but owes whoever holds the bills. Maknanya, the discounted amount is the liability of the group. The undiscounted amount is the one that needs to be cancelled. Okay? The undiscounted amount. In the consolidation worksheet, intercompany bills appearing in a separate account of holding subsidiary companies are cancelled out in the consolidation statement of financial position. If intercompany bills are discounted, the cancellation of the intercompany bills is limited to the undiscounted bills only. Okay? Undiscounted bills saja kita cancel. Discounted bill tak perlu cancel. The bill discounted represent liabilities to third parties. However, a note disclosing the contingent liability will be appended to the consolidated statement of financial position. Here they give you an illustration. Assume that the statement of financial position date at the statement of financial position date, H has bill receivable of 30,000 and S has bills payable of 35,000. Of the bills payable of S, 10,000 is due to H. Maknanya ada bills yang receivable from H, 10,000. Out of this 10,000, H has discounted 4,000. So the undiscounted amount is 6,000. The 6,000 has to be cancelled between bills receivable and bills payable. So maknanya 6,000 debit bills payable of S, 6,000 credit bills receivable of H, 6,000. Macam tu. Yeah. So out of this 10,000, 6,000 has been 4,000 has been discounted, 6,000 has not been discounted. And in the consolidation worksheet, the bill receivable and payable of 6,000 will be cancelled. The undiscounted amount and cancel, as that is the amount of intercompany indebtedness. Itu maksudnya. So let's take a look at an example where a question might give you there is a intercompany balances. Here, example 15, you were given two financial position, H and subsidiary. It says here, given below is a statement of financial position of H and it's 80% owed. 80% owed maknanya percentage of acquisition is 80%. 80% ni 80,000 ordinary shares acquired out of 100,000. Okay? So 80%. And the date of the balance sheet is 31st December X8. Okay? Now, you acquire on 1st January X8. Mean 1 year ago lah. 1 year ago. And pre-acquisition reserve profit, retained profit of S at that time is 15. Pre-acquisition profit. Okay. Number 2, trade receivables of H. Maknanya antara trade receivables ni, receivables of H, payables of S. Antara tu. Okay. Include 10,000 due from S. This include amount due for inventory costing 2,500 sent by H to S on 31st December X8 but received by S on 10th of January. So 2,500 here. This is goods in transit. Okay? Goods in transit. So S has not record this good yet. Okay, out of 10,000 ni. Out of 10,000 ni, S has not record. Jadi kita kena record lah. Kat sini maknanya debit goods in transit 2,500. Debit trade payables 7,500. Credit receivable 10,000. So ini yang kita kena buat lah, on consolidation. Okay. Itu maksud dia. And then bills pula. Kat sini ada bills payable of S. Bills payable of S 15,000 were drawn in favor of H. Maknanya dalam H punya bills receivable, antara dalam H ni dia ada bills receivable of H. Antara bills payable of S. So 15,000 ni were drawn in favor of H. In favor of H maknanya 15,000 bills receivable of H lah. Okay. And H has discounted 8,000 out of 15,000. Undiscounted amount is 7,000 kan. So out of this 15, minus 8,000, so 7,000 undiscounted. Okay, undiscounted. It needs to be cancelled. So the undiscounted amount is between bills payable and bills receivable. So it is between debit bills receivable, credit bills payable. How much? 7,000. Okay. So this is the entry that you're gonna buat. Okay. Faham eh? And then S has remitted 3,000. This is cash in transit lah. On account of loan from H, H received this remittance on 2nd January. So maknanya kat sini dia kata loan ni, loan to, loan from, okay, loan to S 30,000, loan from H 27. Okay, beza dia ni 30,000 dan 27 is 3 kan, beza kan, 3 beza dia. Beza dia 3. 3 tu apa? Cash in transit. Okay, so cash in transit, what you need to do is you have to pass through debit cash in transit, debit loan to S, credit loan from H. Cash in transit you ada 2,005, loan 7,000, 27,000, 3,000, sorry, silap Cash in transit 3,000, loan to S20, loan from 27, loan to untuk S30. Okay, ni yang you nak kena record lah. So kat sini you ada cash in transit. Cash in transit ni akan masuk dalam your consolidated financial position lah. Sama dengan goods in transit ni, akan masuk dalam consolidated financial position. Okay, ni yang dia buat double entry yang dia buat ni. Okay, so in your consolidated, you akan ada bank and cash in transit. Okay, so you akan ada bank ni, termasuklah cash in transit. Okay, termasuklah cash in transit. So maknanya bank ni, it should be bank of H plus bank of S, kan? Kalau tengok kat sini, bank dia berapa? 20 plus 2, kan? $20 plus 2 plus cash in transit. Cash in transit berapa? 3, kan? So you get 20, 25. Understand? Goods in transit pun sama. Okay, goods in transit maknanya inventory. Kalau kita tengok inventory ni 50 plus 20, kan? So the double entry here, inventory 50 plus 20 plus goods in transit. How much is goods in transit? 2005. Goods in transit. So you have 72. Okay, 500. Understand? And then tadi kita ada liabilities, trade receivables. Trade receivables ni apa dia? Yang sini kita ada trade receivables yang 10,000, kan? Dengan 7,500 trade receivables. Trade payables and trade receivables. So maknanya kat sini trade payables ni and trade receivables, trade payable ni dengan trade payable, receivables of H. So receivables receivable kat sini kita ada 30,000 dengan 5,000, kan? 30,000, 5,000 receivables. Okay, and then payable, trade payables ni payables kita ada 20,000 and 30,000. Okay. So kat sini kita ada goods in transit 2,500. Okay, dalam inventories. So inventory kan kita ada 50 and 20 tadi kan. 50 and 20 inventories ni. Okay, yang ni. Ya, yang ni lah. Yang ni. Jadi antara tu kita ada trade payables and trade receivables. Okay. Trade payables kita buat macam mana tadi? Debit trade payables 7,500, credit trade receivables 10,000. Trade receivables. $10,000. Tolak kat sini 10,000. Tolak sini 7,500. Tolak 1,500. This is goods in transit. Yang ni ya. Okay. $10,000. Okay. Trade payables. Betul tak? Kita dapat 20 plus 30 minus 10. Minus 10. Minus 10. Trade payables, trade payables plus debit. Debit goods in transit, credit trade payables, credit trade receivables. Silap boleh. Trade receivables 7.5 minus 2.5. Trade receivable minus debit inventory, credit trade receivables. And 7.5. Trade payable 7.5. Trade payable. Okay. Trade receivables. Okay. So you get 42,500. Okay. Bills. Bills payable. Bills payable of S 15,000 were drawn in favor. Jadi bills ni kita ada bills payable and bills receivable. the undiscounted amount is 7,000. Jadi 7,000 ni bills payable of S were drawn in favor of H. Mana bills receivables? And bills 7,000. Bills payable bills receivable kita ada 20 and 10,000. 20, 10,000. Bills payable kita ada 10 and 25. 10 and 25. Bills apa? Bills silap tengok tadi. Bills receivable 2010. Bills payable 1025. 2010 here. 20 plus 10. Yang ni berapa tadi? Bills payable 1025. 10 plus 25. Okay, 10 plus 25. So the undiscounted amount, which is 7,000, needs to be cancelled. You just cancel here lah. Okay, cancel there. So 35 minus 7, 28 lah. Okay. 30 minus 7, 23. Okay, undiscounted amount. Minus there. Okay. Yang lain normal, you kena calculate goodwill kan. Goodwill you calculate consideration transferred. Consideration transferred how much? 100,000 kan. Consideration transferred 100,000. So 100,000 there. 100,000. And non-controlling interest, first you kena calculate yang ni dulu lah, shareholders fund dulu kan. You kena calculate shareholders fund dulu. Ordinary shares of S 100. Retained profit pre-acquisition, retained profit is 15 kan. Yang kat sini 15. Okay, sini 15 pre-acquisition retained profit. So you get 115 net asset of S on the date of acquisition, and percentage of acquisition for non-controlling interest is 20%. 20% is 23,000 lah. Okay, compare dengan 115, you get goodwill on consolidation 8,000. So you have goodwill on consolidation 8,000. Okay, goodwill on consolidation 8,000 lah kat situ. Okay, so and then you have to calculate the NCI and retained group profit NCI. So for NCI at acquisition date, which is kita dah calculate tadi, retained profit of S, for example, retained profit of S ni kita ada balance brought down kat dalam ni. Retained profit of S 55. Okay, 55. Out of 55, 15,000 is pre-acquisition kan, kita dah tengok pre-acquisition. Jadi post-acquisition is 40,000. Out of 40,000, 80% belongs to NCI. 80% belongs to the group, 32. 20,000, 20% belongs to NCI. NCI acquisition date is 23. Kita dah calculate tadi kan kat atas ni 23. Jadi NCI for the whole consolidation is 30-31. Jadi dalam ini akan masuk dalam kat sini NCI, non-controlling interest 31. Okay, 31. Group retain profit. Okay, post acquisition profit is 32 holdings portion, 32 post acquisition profit of S, plus balance as per holding companies retain profit 120. Yang ni lah 120 retain profit of H 120 kan. So 120 plus 32, 152 is the group retain profit. So the group retain profit will be entered here 152. Yang tinggal ordinary shares. Ordinary shares yang tinggal ialah ordinary shares of H only, because ordinary shares of S has been eliminated lah against investment in S. Okay, yang tinggal ordinary shares of H saja. So ordinary shares of H 600,000. Okay. And then current asset, non-current asset, kita ada non-current asset of H plus 500 plus 200 non-current asset 500 plus 200 700 lah. Okay. Yang lainnya sama. Okay. That's how we prepare consolidated financial position. So consolidated financial position for your exam purpose dah sampai sini, dah boleh jawab exam lah. Okay, saya akan buat satu soalan untuk kita buat final exam punya question lah. Untuk jawab soalan final exam punya question. Any question? Kalau tak ada, kita nak buat quiz lah. 45 minutes quiz, cash flow. Okay, that's all.